All right, good afternoon, everyone. This is Joe Henches with Beyond the Chart. Today is Saturday, April 12th, 2014. This is technical analysis of the stock market today, weekend edition. All right, we're going to start off here, and we've got a lot to cover today. I want to get into this. The post 8 takeaways from last week's trading. So I want to first with the Dow. We were down another 143 points today, and that was on top of the big move for the entire week. So I think the main points here on the Dow, I'm going to try to reiterate some of the things I talked about in the post. Get rid of this. We broke this major trend line from February 5th, the low on February 5th, okay? We had a little stab at it back here on March 27th, but that was a false move, and then we rallied back up. Now we smashed back down through it. I mean, we closed below it here on the 4th, on that big Friday reversal. And then the rest of the day, we just smashed on down. And the other thing is the Dow has now closed below the low of the last 6 weeks, not just the closing closes, but closed below the low. The low this day was 1646.99. We closed 1626. So, we're showing some, substantial breakdowns in here. Let's see, 6 weeks. The other thing I wanted to mention in here is the ADX. And let's see if I can pull this up. Here we go. I talked about this in terms of when the ADX is rising and it's above 20, this black line is the 20. It's in a trend mode, okay? So it was showing trend here back in December to the upside. It was showing it was trending. And then when it started to go sideways, this started to pull back and it said, okay, we're not trending anymore. We're kind of correcting. And then when it broke down here in January, it started trending again. So the trend was now to the downside. And now as it pulled back up and rallied, the trend stopped and we're in a non-trending mode, and we went sideways back in here as we're starting to go topping out. And then we broke below the 20. And so we are in this entire time in here as a non-trending indication by the ADX. And so now what I'm going to be watching for is if we continue to sell off in here, does this rise above 20 and get rising again, confirming again a downtrend? But the whole point is this is telling us that we are not in an uptrend up in this time frame, and now we're broke this trend line, okay? The other thing I want to mention, sometimes it's a little clearer looking at just close only, okay? And I'll talk about my scenario in here. I now believe that we've got 5 complete waves up. And this is going to be my preferred scenario until the market tells me something different. And I'm basing this off of the closes on the Dow Industrials. Okay, yeah, we had a slight little intraday here. And this one was a slight little intraday low, which should not go past here. But the closes did not. And I'm going to show you how this is much clearer when you do a line chart and you look at the close only. Okay, here we go. All right, so this peak here on December 31st was 576.66. This peak over here on April 2nd, 573.0. We did not close at a new high. It looks to me like we have 5 waves down in here. This could be a wave 1, a wave 2 pullback, and a 3-wave move, and we could be rolling over and starting a wave 3 down. So we'll have to watch and see. And therefore, I counted, we had the 5 waves within this 5th wave, and it then makes 5 waves up from B. So we have a C. So we have an A, B, C completed, which also then completes potentially in here a big complex ABC, ABC, ABC. So it's what we call an Elliott wave, WXY. Okay, so the point is it's a complex correcting higher, and that's the scenario that I believe is playing out until the market tells us differently. I'm going with it. Now I want to quickly move to S&P. Basically, it's confirming again a breakdown. It's not really, trading quite a bit below all of this action over the last few weeks. The NASDAQ, of course, the NASDAQ and the Russell 2000 are the ones that, here we go. NASDAQ, the big thing on the NASDAQ is it broke down out of this channel. Okay, so this is the one we've had a lot of selling. Okay, and so I do think we're possibly going to get support. You could get support coming in here, here, or it could drop down to the 200-day or 233-day SMA that I've got in here. The other thing I want to mention is on the weekly chart, which we talked about last time. Here we go. NASDAQ weekly. I had mentioned when we got a couple closes in a row below the 10, like we did here, that it usually, it indicated more selling, and that's what we're getting. We're getting more selling. So it'll be, and this came all the way down to the 55-week moving average back those last two times. So we could easily see that down into here, which is right around the, what is that, 3,800, something like that. Yeah, close to 3,800. So that's a possibility. All right, the New York Composite. Continuing to play out this broadening top that's breaking down stronger now, not nearly as much as the Russell 2000, and the Russell 2000 is definitely making headway down into here. This reversal will be complete when it closes and trades below this low down here, okay? And I mentioned that in the blog post. So this is a broadening top. Now, the interesting thing about this is that this broadening top and the one on the New York are basically mini versions of what we're seeing on the Dow Industrials on a weekly basis from 2000, okay? We're seeing a broadening top up here. So the expectation is, if this is truly a broadening top, this is going to start to roll over and come on down and start to sell off. So that's what we're watching for, because again, all you can try to do is read the signposts and say, okay, here's my expectation. Is it playing out as expected? All right, let's move to the short-term trading index real quick. We had not as high a reading on it, but so the 10 EMA moved up slightly, but is still not in extreme bearish mode yet. The VIX, I talked about this last time too. I think it was on Thursday. CBO volatility, would it break the trend line? It broke the trend line fairly strongly. And so there's a strong indication. We did it here. We did it here, that we could get more selling to the upside and come up here and try to test this 21.5. That'll be real interesting to see if that happens over the next week to 2 weeks. Okay, as high-low SMH. This is also breaking down. Yeah, there it is. This is breaking down pretty significant. Of course, we had, the negative divergence that was telling us it was weak, and now we got the follow through on it. So the semiconductors are breaking down. The XLF is breaking down. And I wouldn't be surprised to see XLF down in here at the bottom of this wedge, and that would coincide with maybe the 233 or possible support in here. So that's what I'm looking for on that. Let's take a quick look at Apple. Apple is continuing to do what we thought in terms of selling off after it broke this trend line this last week. Took out this point, 523. The next one to take out is 515.90. 60, I guess, 515.60, and then that would be an indication it's continuing to push to the downside. That's what I'm expecting, and that's the way it's acting. Tesla continuing to trend down. Of course, a lot of the selling coming in. I'm looking for potential support at a trend line possible, but it'll probably break it, is my guess, and then the 233 day is down here at 160. So this would be the first test, and of course that kind of coincides. Let's see if it does. Not quite. I mean, here's some congestion that could possibly give some support also to Tesla as it pulls back. And then the last one I want to take a look at is Pandora. And Pandora is selling off. And again, I think the big thing in here was because this had 5 ways up, I was looking, there's a 50% correction that's down a little bit lower than where it's at. Plus there's a gap right in here that's open that it could try to close. So we could see more on Pandora to the downside in here. It broke through, it closed this gap, broke through this support. Getting a little bit of bullish divergence in here, so we'll have to watch that. Here's the 233 day, but right now it continues to look pretty negative. So, all right, that's it. A lot to cover in 10 minutes here. We'll talk to you tomorrow. Joe for Beyond the Chart.